It's a problem east of the Mississippi River. Obviously, the farther you go east, the worse you get, maybe to Ohio.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you, and we love having you on board with us. Thank you for all the support you have given us. We encourage you once again to like these videos, share the videos with others, and also you can subscribe to these videos. What does that mean? Well, we will let you know every time we post a new update. Just click that bell icon down below. Today, I have with me Justin McKinney of Comstock Investments. We're going to talk about the market action on this Thursday. I had to look. A lot of times when you and I talk, it's a Monday or a Wednesday or something. Thursday, it's kind of an interesting day, and we had some weird things going on in the ag commodity markets. We'll start with the grains here, Justin. And, for the longest time, it looked like maybe the rally was going to be beat to death here in the grains. But they seem to kind of have a respectable close, didn't they, by the end of the day?
For sure, Marlin. I was very optimistic. In fact, tonight titled the report, it took all day, but we got there. We had flash sales this morning on soybeans. 126,000 metric ton to China, 189,000 to unknown, probably China again. Yesterday, there was rumors circulating the market that about 6 cargoes were sold. Today, we got confirmation of those 5 cargoes. Now, since we're doing this on Thursday and we have the holiday, the export sales report won't be announced until tomorrow morning. And trade is expecting 15 to 20 cargoes of export sales in soybeans. So definitely positive moves in the beans. The exports have been pretty good. As we gear up into that early bean harvest, their beans are sure changing on my drives around here. Granted, I drive the same routes, but in a 2.5 hour swath, they've changed a significant amount in the last couple of weeks. So another 2 weeks, we're probably going to dive into those beans and find out what we have here. As we looked around the corner into next week, we have the USDA crop report coming out next week. Our first chance for boots on the ground. We're going to get ear weights, pod counts, things like that. It wouldn't necessarily shock me to see a really big pod count or something slightly bearish put into the market there. But by the time, and no doubt, the southern part of the belt's probably going to be pretty darn good this year. But as we move north here, it's just been so dry and large swath for so long that I just don't see those top pods filling out quite as well as what maybe we were thinking earlier in the month, at the start of August.
And I wanted to share with our audience, we were actually on a conference call yesterday. And you made a comment that really caught me off guard. You said that you had some, I think it was one of your family members had a cornfield that they were estimating it would make so much, but then they got in there and what was it? They chopped it for silage.
Appraisal for silage.
Did a yield estimate on it after that. And it seems surprising to me. Tell me that story if you don't mind.
Yeah, no problem. So our farm is in Southwest Wisconsin. We don't farm a ton of acres for the record. So everything that we got put in was put in extremely timely in April this year. Looked great, side dressed with nitrogen twice. Everything just looked absolutely phenomenal. Came in, did some silage appraisals, 210, 220, 230, which, depending on what area of the country you're in, that sounds good, sounds poor. And even to the south of us, maybe 20 miles, that might not be quite the yield that they're expecting. But the take-home point, Marlin, was I would have bet that field to be 240 all day long, maybe even 250. It just looked phenomenal all year. Not really sure what happened, if it was just the variety this year that we planted there or what, but slightly disappointing, at least for myself.
I thought that was extremely intriguing to hear that anecdotal story, and that's not the first time I've heard something like that. The early harvest reports are starting to kind of dribble in here, and it's interesting the kind of a wide variety of reports that we are seeing. I can't wait to hear from maybe our viewers like in Ohio, maybe up and down the eastern seaboard, the eastern part of the Corn Belt, the Southwest. I have a feeling we're going to hear just a wide variety of stories coming in. And I would encourage all of our viewers to take part in the comment section down below and let us know what you're finding out. Do you have any early results? How does it compare with some of the other viewers? Uh, the other day we had several people that chimed in and they commented on how things were turning out in their area, and they had a little back and forth. And I thought that was kind of interesting to watch that. So I would encourage that. And then, we have our premium content as well that comes out in the mornings, and I'm sure that we could probably mention some of that in our premium contents for our kind of an inside look at the markets. Um, Other than what happened with soybeans, now they did come back, and I see where they closed a couple of pennies higher. Corn couldn't quite get its head above water. It tried late in the day, but did we do any damage on the chart or not on the corn?
No, I'm actually optimistic. The December corn, we had the beans down this morning. We had wheat off. We had the making of pushing that corn, maybe down to test that $4 area. Just rejected it, worked back up to close to yesterday's close, off a few pennies. But to piggyback off your yield stories, I have a lot of clients in Western Minnesota starting some edible beans, hearing that those yields are down just a little bit. Sugar beets sound like they're pretty darn good up in the Red River Valley. You move into Minnesota a little bit, and boy, they're just not that great. They had so much water up there this year that they're taking a yield hit there as well. So as we look at all these crops, I know in this area we grow a fair amount of canning crops. So generally how the sweet corn goes is generally how the field corn goes. So as we look at the big picture things, it leads me to at least pause for a second on these huge yields. I'm not saying that we won't be a record, over last year, but when we continue to see 183s, 184s, 185 national corn yields, I just scratch my head and don't know that we can get there. Maybe we can if Illinois is as good as advertised, but we got a lot of work to do to make up for at least Minnesota.
Well, as much as we have dropped this year in all the grain markets, I believe the biggest drop was in the wheat trade. What was it, $3 or more in some of the wheat contracts? And September is when we plant winter wheat in a large part of the country there. And I guess everybody is at decision time right now. Do you think that there's enough incentive on, let's say, July wheat of next year to encourage people to go ahead and plant? Do you think with the drop off in corn and soybeans, maybe they'll plant more wheat? I mean, what do you think here?
So much of that is dependent on what the weather is out there, right? If you have the moisture at the right time. We have seen a nice move in this market, 70 cents in some markets on the old crop, pushing up, knocking on the 100-day moving average. I do think that, everybody likes to do what they're good at, whether that's feeding cattle or hogs or corn or beans. There's just nothing out there in the market, corn, beans, that really says to me, I'm going to steal some acres. We talked about fertilizer prices being steady to higher versus last year. You got to think that if you're a fringe acre farmer of the Corn Belt, that you're definitely going to pump the brakes on the corn price, unless we see a huge spring, rally where we get those crop insurance prices up. But for the most part, I kind of think people are going to stick to what they normally do out there.
I've been listening to you guys talk among yourselves on the staff here, and I keep picking up that the basis is really regional, and in some areas it may not pay to store the crop for this fall, or maybe there's so much old crop that it's going to squash the basis and you're not going to have much opportunity. How much of a divide do you see in that? Is that kind of the case if you go in the eastern half of the belt, or maybe I should say the eastern part of the central Midwest? Is that a problem with the old crop still?
It's a problem east of the Mississippi River. Obviously, the farther you go east, the worse you get. Maybe to Ohio. I talked about that in the comments this morning, that, we have a poor crop in the southeast. Parts of Ohio can be really good. Some parts might not be that great. We'll probably see the rail market pull a bunch of corn out of Ohio in the fall. But as a general rule, you look west of I-35, those bases are still smoking hot. Processors still paying premiums to get old crop bushels in where crops didn't get planted. And they're scrambling to cover some stuff out there yet. So we have this definite divide of overs versus massive unders. And then we talk about the Mississippi River levels being low again for the third year in a row, which is definitely not going to be friendly basis on the Illinois, Ohio River Valley, and even up to the mid-Miss where I farm. So unfortunately, there's going to be good cash carries for farmers in those regions. West of there, it may pay to put some wheels on it. That's kind of an individualized thing depending on where your actual farm is. But it is definitely something to consider. Maybe give us a shout. We can work through those numbers with you.
And I believe in our premium content. And again, everybody can try it for $1 for a month. It'd be well worth it this time of year. I believe you guys have been pointing out some of the hot spots when it comes to some opportunities out there where maybe there's a temporary shortage in one area, and you let everybody know. I know there was a case about a week ago where they only had about a 3-day window to take advantage of a marketing opportunity. And for the people that took advantage of it, it saved them, what, 40 cents or more?
Yeah, 40, 50 cents. And that bid was for 3 or 4 hours, and they bought, more than enough grain to cover them for a significant period of time. So those are hit and miss basis numbers. We've talked about it. If you happen to be in one of those areas and you have corn that you can hit that early market, it may pay to get some wheels under it and get it moving. East of the Mississippi, it's definitely a different story over there.
That makes that $1 subscription look pretty cheap, doesn't it? Let's talk about the livestock trade. Okay, somebody threw a banana peel in there in that market today. What happened anyway?
We have not defined a cash market yet as of recording this. We had a few head trade in Kansas, very, very few head that were a couple bucks cheaper yesterday. We have a cattle market that just continues to have so much concern around it. Even the euphoria that we had 6 months ago, the overall Chinese economy, the United States economy, the presidential election upcoming, seems like it's let a lot of air out of that balloon. We still have boxes, choice boxes over 310, 312, selects hovering in that 297 to 303 area. Nothing has really changed on that front. The part that's really changed is we continue to have these high weight cattle, and we're kind of bailing the packer out by putting all these pounds on the cattle. I would sure like to say that we shouldn't do that, but I am also one that is probably guilty of that as well. So thou shalt not cast the stone, I guess. But we've bailed these packers out. The funds have kind of lost a little enthusiasm with all the uncertainties in the world and where we're at. The jobs report coming out tomorrow probably will be the driver of the stock market. The stock market and the cattle have been trading very close, except for a few days this week where we saw the cattle market divorce the stock market. But in general, until we can get some better footing or at least some more reassurance on the general overall economy, the board's going to probably have a little bit of tough row to hoe here.
I did see a press release today by the U.S. Meat Export Federation, and they were crediting some of the strength in the cattle and the hog markets to a lot of import demand on the part of Mexico. And, I didn't realize that they were that much of a strong player in our export market. But boy, they really have been holding up their end of the deal over there as far as demand. Is that something that you see staying very strong, or is that kind of an aberration?
Well, without Mexico, where would we be at on the hogs? I mean, they've just taken so many dollars worth of pork and product this year. We would be, probably at 1998 levels. You look at 20 to 30% of the pork. That's just a huge amount of pork that moves south. So without Mexico, we would be in some serious trouble on those hog markets right now. We look as we move forward towards October, we have seen case features in the meat counters pull back from offering some beef products, pushing a few more pork loins. We saw that. I reported on that yesterday morning in the Comstock report. Today, we saw the cutout come out $7 higher on the pork loin. So as we still have a problem with the bellies, we were not able to mount much of a rally this year in the summer months where the bellies are historically strong. Overall, the bellies under $1.20, a shade tonight or this morning at noon, just a shade under. We still have a belly problem. We're still killing more hogs than last year. So overall, supply is a problem. But positive to note is, anytime we see those ham prices dip, Mexico swoops in and buys a bunch. The loins are starting to move a little bit higher. Overall, we're still got plenty of hogs to work through. If we would lose that export market, that could get very ugly in a short amount of time on those hogs.
Justin, I keep hearing a lot of talk, though, about the economy in China kind of going in the dumps, and that has really been impacting the U.S. Ag markets, like the equity markets, putting a lot of pressure on them, also on the energy trade, on thoughts of lack of demand if the economy goes south in China. But, they can tend to buy quite a bit of U.S. meat. I wonder how big of a concern that is.
Well, overall, reportedly, domestic supplies are very, ample in China at this time. So if they're a country that's going to use their own product before they bring a bunch in, naturally, that makes the most sense to me as well. But, that huge overhead water balloon that's waiting to bust of the Chinese economy and put the flames out on, what could be the whole world's economy, I think is pushing not only the hogs lower, but I think it's what's definitely pushing the cattle lower.
Yeah, and you keep hearing the stories and seeing the visuals of the 40-story hog confinement houses in China. Unbelievable how they have modified things. I hope we don't have to come to that here in the U.S. Anything else out there really grabbing your attention right now as we get ready to trade the last day of a short trading week here?
Nothing that grabs my attention right now. We're going to turn into the first full week of September. We should see harvest pace start to increase in the south, get a little bit more yield data. Exports, if we get a good report tomorrow, which we most likely will, we're going to need to keep that steam rolling ahead of before we get to gut slot harvest. So just kind of keeping an eye on that to see where we're at. And if we do not see those basis numbers break in the West, possibly taking advantage of that, and we'll see what the East numbers are. But unfortunately, it looks like a store and wait for better, hedge to arrive, or futures only or something like that, and wait for a better basis on the east side of the belt.
Okay. Well, thanks for all the information, Justin. Good to talk with you again. Justin McKinney with us. He is with Comstock Investments. That'll do it for this episode. For our producer, Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.